Hello, everyone, and welcome to the author interview series. Today, I have with us Michele Cagan, who has worked as a financial planner, accountant, and tax advisor. She's the author of several books on business, and one of which is Investing 101. It's actually one of my favorite books. Uh, but yeah, thank you, Michele, for being here today.
Glad to be here, Ryan. Thank you.
Yeah. So let's start it off. So what made you write the book, Michelle?
Well, really, why I wrote it is because so many people don't know about investing, even though they're invested. They make money in a 401k, or they may, you know, buy a mutual fund here or there, but they sort of have no idea what they're doing or
Mm,
how to do it better. And I wanted to make sure that people understand not only how to invest, but why they want to invest, because that helps them make better selections for their own portfolios.
mm, okay. And so I guess for people who are somewhat new to investing,
Mhm.
or who want to start, what would you recommend or suggest to them?
When people are first getting started investing, one of the first questions well, it's sort of a combo question I first ask them is why and when.
Hmm.
So, why do you want to invest and when do you want the money back? So, if somebody says, well, I want to invest because I want to make a lot of money, and I'll say, but for what? Like, what do you want to do with it? If you want to buy a house in 5 years, it's different than if you want to retire in 10 years, and it's different than if you want to, get an extra $400 for this weekend. So, what they actually want to do would drive what kinds of things they would invest in. And then the second thing I say to them is know what you're buying. You
Hmm.
wouldn't buy a car without knowing what you're buying. Don't buy a stock without knowing what you're buying.
Yeah, I love it. Yeah, no, you're absolutely right. It's you got to know what it is that you're putting your money into, because otherwise, I guess you're just kind of uh, putting the you're throwing your money away potentially.
Well, yeah, it's gambling. If you're just like randomly picking something, it's a gamble. And I also try to remind people that there's a really big difference between trading and investing. Those aren't the same things.
Mm.
And people who see like, oh, he made $50,000 on one trade. I'm like, yeah, that's not what you want to do because you don't know how many $50,000 he lost before he got to that one big win.
No, that's a really good point. I was rereading The Intelligent Investor, and in the first
My favorite.
chapter just talks about speculating versus investing. So yeah, no, that's a really big one. And so I guess what are some financial mistakes that you see that people are making that you've noticed as a financial consultant or financial planner?
When it comes to investing
Would
or in
and
general.
in general, yeah.
Okay. Well, when it comes to investing, first of all, I one of the biggest things I see is that people buy and sell based on how they feel. And that
Mm.
is the absolute fastest way to lose money. Totally keep your investments and your money away from your emotions. They don't go together.
Wow. O-
So, yeah, it people see like the market going down and they get scared and nervous and they sell everything, but that's often the exact wrong thing to do.
Yeah.
So
Okay.
try to keep it separate, how you're feeling and what you want to and the actions you're taking with your money. Another thing I see a lot of people making a mistake is investing before they actually have savings because they think
Mm.
investing and saving are the same thing, and they're not. Saving is for the money you cannot afford to lose. When you're investing, you need to be able to afford to lose that money, but not want to lose that money.
Mm. That's a okay. So in terms of savings, how much should someone have ideally saved before investing?
I normally tell people to have 3.5 months worth of rent or mortgage saved,
Hmm.
and then you can invest.
Okay. Okay. So usually 3 months, 3.5 months of rent, or or mortgage.
Yeah,
Uh,
because you don't
mhm.
want to be able to pay for your house.
Yes, yeah. I
For
think
sure.
people want a place to live. But
Yes.
you wouldn't also say 3 months of, I guess, groceries or any other sort of necessary expenses?
Well, I would say that yes, but then people get kind of confused about exactly how much that is. So really, I say 2 months of living expenses, but then people feel like, well, I don't have a budget, I don't know. So then that's why I changed it to 3.5 months of rent mortgage, because that's like a little bit more streamlined and more people know what that number is than what
Mm,
their monthly expenses are, quite
okay.
frankly.
Oh, that's yeah, that's amazing. Just keep it simple like that. I love it.
Yeah, I like to trick people into doing things the simple way.
Awesome. And okay, so your book is somewhat about knowing your risk tolerance and, as you said before, your timeline, and that'll kind of dictate your the investment vehicles that you'll be putting your money in. Now, I guess maybe for yourself, what are some maybe you can, I guess, give an example. So, what is your personal investing style, or what do you like to invest in, or what do you, for someone who says, "Oh, I don't know where to start," would you like to use yourself as an example?
Well, I'm a little further along than people who are just starting, but when I was just starting,
Hmm.
I would buy just only a very few individual stocks, not very many of those, and I would mostly go with mutual funds because ETFs, exchange traded funds, weren't out when I started investing
Hmm.
because I'm a little older. So, but now I would tell anybody who's starting out that as you're getting used to how the markets work and how different kinds of companies do well in different kinds of economic environments, ETFs are a perfect place to start. They're investing
Mm.
with a safety net. So you have instant diversification, but you're also trading like a stock as opposed to a mutual fund. So you can, exactly when you're trading something, and so I like people to start out there. For style, I personally, I am a growth dividend
Mm.
investor. And I don't mean growth companies that pay dividends. I like companies that have dividend growth. Like their
Mm.
dividends are getting better over time. And to me, that means that they're doing well enough to keep paying their shareholders more. I always think this, that when you're going for just growth, you don't actually have any more money or any more value until you sell. But when you're
Mm.
going for dividend growth, you have something more. You can reinvest those dividends and have more shares. You can collect those dividends and have cash. So growth doesn't actually exist until you sell your shares. But
Mm.
dividends are right there, they're real, and they're yours.
Oh, okay, that's a
That's my
really,
style.
yeah, I know, I love it. It's actually read another book, and it's you may or may not know this author, but or this book. It's called Get Rich with Dividends, and it's basically the same idea where the author looks for dividend or companies that, I guess, have that increase their dividends on a consistent basis, and he says that over a 10-year period you'll see yields of maybe uh, 11% and returns of 12% consistently if the companies increase their dividends consistently and you reinvest them. And yeah, and so because your, I guess, your initial cost base is just so low that because of compounding, your dividends will get you more shares, and then so on and so forth. So yeah, no,
Yeah.
I've actually heard that style before, and that's kind of somewhat influenced the way I invest as well.
That's good. I actually I've not read that book, but I feel like if their if their dividends are growing, that also means they're growing. But that also means that somebody's going to notice them and that share price is going to keep moving up. Maybe not as fast as a super growth stock, but it's going to keep moving in the right direction.
Yeah, no, I agree with you 100%. Dividends. with a decent payout ratio, it's a sign of companies that of a company that is somewhat financially stable or healthy.
Well, they have cash, and
Hmm.
that's a pretty big thing too,
Yeah, cash is
because you
king.
can have earnings and not have cash. It's better to have cash without earnings than earnings without cash.
Yeah, no, I agree with you 100%. Yeah. Um, okay, so let's take a look at the next question. Now, you put a section at the back on top investors. Now, who are some of your favorite investors? I think you talked about, was it Benjamin Graham or Warren Buffett? I can't
I
remember,
love
but you,
Benjamin Graham
yeah, so you have
because
a few. Hmm.
I'm a firm believer in looking at a balance sheet, looking at a cash flow statement. You are buying a company, you should know what company you're buying. I'm a
Mm.
very big believer in that. Anything else is guessing. And that's, to me, that's not a, a long-term investing principle. So I really got my start from Benjamin Graham.
Mm.
A lot of the people I put in the book were because they had sort of interesting and weird stories, or I kind of like that. But for me personally, I mean, in addition to Benjamin Graham, I'm also a really big fan of David Dremen, who's a famous contrarian investor.
Huh.
I don't actually invest that way, but I like the idea of it, that going against what everybody else is doing. If you're following the pack, you're already a day late. But if you're doing the opposite, kind of, George Costanza from Seinfeld, if you do the opposite of what other people are doing, you have a better shot at making big money. That's his sort of philosophy. And I think it's interesting.
Yes, I can understand his thoughts. If you put your money in, I guess, into the market in what 2008 when everyone was selling, yeah, I mean,
Yeah.
looking back, yeah, you would have made a killing, but you, I mean, then again, you don't know when it's gonna last, so it's just yeah. So there's also a gamble with that.
It's it's hard to do that. That's sort of where you have to really remove your emotions from your investing when you're doing contrarian, because you can't get swept up either way, and you have to be willing to be like, okay, this is going down now. Be nice and calm about it.
Yes.
Um,
Um,
so yeah, I just find that style very interesting.
how now? So, what would your advice be to someone who is very emotionally attached to their money, especially during, I guess, kind of during a bear market? What can people do uh, so they don't sell or buy high and then sell low?
Okay. Now, again, this sort of has to do with your time frame.
Okay.
So if you have even a 1 year time frame, my advice is, when there's a downturn, don't look. Look away. Don't pay attention.
Huh.
You're If you pull out when things are down, then you'll miss the upswing. And that happened to a lot of people in 2008. I'm
Mm.
not talking about people like who retired in 2008 and needed to take their money out. I'm talking about people who got upset and took their money out.
Ooh.
So if things are going down and you have some time to catch up,
Mm, mm, mm.
look away. Because if you've picked good investments and you've done your homework and you know what you invested in, you believed those were good companies,
Mm.
they're still good companies.
That's true. That's
Now,
true.
if a company declares bankruptcy and it's not a market downturn, that's a different story. If there's a company specific issue, I would sell it.
Ah.
But big market downturn, just don't look. Just don't even look. Just wait until things start moving the other way, and then reassess your situation.
Great. I actually interviewed this other author, and he says he invests in low cost index funds, and he says that when it's dipped or when it goes down, he's excited. He says it's buying time. Yeah,
It
I'm in
is.
the
It's a time
market
to
to buy.
Yeah, it's
Yeah.
a time to scoop up bargains.
Yeah, so it's funny. It's exactly kind of yeah, just look away, or if you're the type of person who knows that you don't need the money anytime soon, then yeah, you just better start buying.
Yeah, it's hard to do. It's hard for a lot of people to do that, but I just don't
Don't
look.
look. All right. Well, I love it. Thanks. And so This this may or may not be your area of expertise, and I can't help but ask because everywhere you look, they always talk about it. They always talk about cryptocurrencies. Now, in this book, unfortunately, you don't really talk too much, or there's nothing about that sort of asset class. Maybe because this book was written a little bit before cryptocurrencies were big. But what do you know about them? What are your thoughts? Yeah, feel free to just comment anything that you.
I know enough to be dangerous,
Okay.
which is not much at all.
Oh,
I
okay.
understand how they work and I understand sort of the blockchain chain technology idea.
Mm-hmm.
I also think that now that they're starting to be like futures trading on them and they're becoming more mainstream, that you're going to see them sort of end up maybe similar to other types of commodities and other currencies. I think for a lot of people that were in a while ago, they're a good investment. I think now they're pretty pricey and
Mm.
they're sort of on the upside of a bubble.
Okay.
So if you're just starting to get into it now, I would, I don't know. I don't know enough about it,
Okay.
honestly, to give a super smart answer, but I feel like it's on the upside of a bubble and it's not on the downside yet. So
Mm.
if you're interested in it, maybe one of the less expensive ones, not, I mean, Bitcoin is pretty high out of a lot of people's,
Yeah.
reach, but Luthra, like some of the smaller ones are maybe running at about $200
Okay.
and which is still a lot, but I think it's on the upside of a bubble.
Okay.
So it's still going up, and I think it's going to be a little while before it starts popping down.
Okay. And would you say that people should or shouldn't put their money in? I mean, some people say, oh, you know what, just treat it like Vegas. Whatever money you would
Yeah,
spend at Vegas, just, yeah, go ahead and feel
that is
free to.
that's great advice. Money that you would spend in Vegas, pop into Bitcoin. You could totally, you're more likely to win big on Bitcoin than in Vegas.
Yeah, you know what? I agree with that completely. It's if I had example $500 to go, play at the casino versus $500 in Bitcoin, I'd probably put in Bitcoin. Yeah, you probably have a better shot at making more money in crypto uh, than going to Vegas.
Yeah, and you'll still have the big roller coaster ride. Will it go up? Will it go down? I mean, it's still going to be a little bit of a roller coaster, so you still get that thrill when it makes a move.
Yeah, 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 absolutely. So I actually have some money in crypto, and it's just watching those charts or the prices swing up, the swings and ups and downs. It's a very emotional roller coaster ride.
Look away.
Yes. Well, yeah, absolutely. For someone who can't bear seeing prices go down, then yeah, definitely take Michelle's advice and look away, or buy more. Okay.
Exactly.
Yeah, and so as we're just kind of finishing up, what's in the works for you? Will you be writing another book? I know you've got other books, but will you be writing another one?
Yeah, I actually just had a book come out, which is more about personal finance in general,
Okay.
geared toward millennials. Um, that just breaks down all the financial things that everybody expects you to know, even though nobody ever explained it to you,
Mm.
like how to pick a credit card, or what to do to get your house ready to sell it, or what do you do when you know your landlord tells you you can't have your security deposit back. Things
Mm.
that people expect you to know when you're an adult, but no one has ever explained. So
Wow.
every financial thing you need to know is sort of in the new book. It's called The Infographic Guide to Personal Finance. It's from Simon and Schuster,
Okay.
and I have a lot of irons in the fire about some updated investing and personal finance books coming up. And I'm doing a lot of writing that I'm posting in websites and stuff. The new book was actually just featured in the Washington Post on Sunday, which was kind of exciting for me. And if I have something new coming out, I would certainly let you know.
Nice, nice. So the book again is the infographic guide to personal investing.
To personal
Oh,
finance.
to personal finance. Sorry.
Yeah. But
Uh,
I mean, there is an investing section, but it's just one part of it.
okay, great. No, that sounds amazing. Yeah, that's For myself, I don't even know what to do if if my landlord doesn't give back my deposits. Like what? These are things I would have never thought about. And
Until it happens, right?
yes,
And a lot of personal finance books are super lectury, and it turns people off, and they don't want to. This is just, look, if this happens, here's what you do: one, two, three, do those things.
yeah,
It's more of like an action guide
yeah.
than a
That's
lecture.
amazing. A very good practical guide to, I guess, getting your answers, or getting your questions answered.
Yeah.
Okay, great. And lastly, where can people connect or find you?
Well, the best place is my website, which is Single Mom CPA, all one word.
Okay.
And there's new stuff going up there all the time. And well, in the U.S., tax season's coming up, so
Oh yeah.
there's going to be a lot of that. But there's also a lot about investing and managing debt and credit cards and how to make money, how to find money, how to stop spending too much money. Um, but yeah, we're putting new stuff up all the time. So, and any questions that people have, I'm happy to answer them.
Love it. Singlemomcpa.com. So for everyone who's listening or watching, I'll leave a link down below to Michelle's website. And yeah, so well, I guess that would be it. But again, thank you so much, Michelle, for allowing me to interview you today.
Thank you, Ryan. I really appreciate the opportunity to talk with you. I think you're actually a pretty savvy investor
Oh
already.
yeah, thanks. I've read quite a number of books on investing, so but yeah, I always love talking about or talking to investors or talking with people who know about investing just to get ideas and see what they're interested in.
It was so great talking to you.
Yeah, it was great. Well, thank you.